Hello, everybody. Welcome back to another episode of The Market Close. It is Monday, September 9th, 3:45 p.m. And there's a lot of stuff to talk about, obviously, today. We got a ton of stuff to go through. But I think we gotta get started with one of those things that's happening today that I'm sure you guys are looking at this and you're kind of just like, hey, is it really happening? Yes, folks, it's really happening. $34.62 on Palantir. We are up 14% on the day. It's one of those things where it's like it's just the market's excited. It's like, what else are you gonna say? The market's excited as Austin says in the chat, it's happening. That is correct. It is happening. Palantir today signed a 5-year extension with BP, one of their earliest commercial clients. Pretty big news, important news. Obviously, that matters in the context of the stock. I don't think that is the reason the stock is up today. That's probably partially a reason why the stock is up, but really the stock is up because we got included into the S&P 500, or we got announced that we got included last Friday. Will be officially included on September 20th. And I believe the street, retail, whoever you want to call that's investing, is front running the announcement, which will be or the actual rebalance, which will be the acquisition of probably a couple 100 million shares in order to match the fund allocation sizing for the S&P 500. So it's a big deal, folks. And you know what's really interesting about this is that in the morning we were trying to get to 33. We got to 33, then it was going back to 32. Then it came to 33.50. It was like, okay, 33.50 is amazing. Then for like a good 10 minutes, it was going from 33.50 to 33.99. And it kind of felt obvious it was going to touch 34. Then we broke 34. That's amazing. Then we went to 33.80, then 34, then 33.97. And we teeter and tottered around 20 or 34 for basically a good 15, 20 minutes. And then we broke out. By the time I left, I think we fell back down at around 11:30 because you get that 10:30 slam that's been happening for almost 17 trading days where the entire market falls. But by 2 p.m., it was inevitability that Palantir was going to hopefully close above 34. We got 13 minutes left. I think we will close above 34. And the fact that we're closing above 34.50 is just incredible, dude. It's just incredible. As Gene says right there in the chat, Palantir is now up 104% year to date. Over 100% is what the stock has been able to do, which is pretty incredible. Nvidia stock actually year to date is up 119%. So we have a couple more months left to see what happens, but Palantir is on track to perform the same as Nvidia, which when you think about Nvidia, the numbers they put up, the sort of earnings they had, everything was absolutely crazy. Palantir not too far behind. So up 100% year to date. It's pretty incredible. I do want to say in the midst of the euphoria, is there a chance this thing collapses, falls 20%, goes back into the $30 range? Now the dip feels like 32, doesn't really feel like 27 like the dip used to feel because now the bar just gets raised higher and higher. Of course, anything can happen. But I don't think a day like this is the day to worry about that. Like if the stock falls to 29, 30, whatever, if we have a bad CPI, whatever happens. This is one of those days to look back. I've got a lot of messages from people today on X, basically just being thankful for the fact that they've been part of this journey, that they've been keeping up with the stock. Tons of people have sold in between. Some people wish they bought more at $8. Some people had an $8 average. They sold a little bit at 15. They wish they didn't sell at 15. I think all of the mishaps or sort of like bad things that have happened in regards to your relationship with the stock, whether you sold covered calls, whether you had too many early sells. I know there were plenty of people when the stock was trading from $7 to $10 that were scraping it in and out. I think none of that stuff matters on a day like this, because at the end of the day, if you're a shareholder and you have a position in this company and you believe in the long-term mission, then it's one of those days to just be excited, regardless of how much your personal net worth is up from the company. I think most people invested not just for the dollar amount, they invested because they believe in Palantir and getting into the S&P 500 and proving that they are a company that deserves to be in the top 500 companies of the United States of America, given they're a company that actually gives a shit about the United States of America. I think that's an important thing. I think that's a really important thing. And to be honest, if you think we're just getting started and the stock one day is going to be much higher than 34, then I think it's one of those things where you kind of just sit back and relax. A lot of people, to answer the question, I have also gotten a lot of messages today of saying, hey, I missed Palantir. Is this a right time to start buying at 33, 34? I cannot answer that question. All I can say is you have to either be long-term or not long-term. If you're not long-term, could I see fat Palantir falling back to 27? 100%. Anything could happen. And then if you buy it at 34, you're down $8 a share. You might hate yourself for that. But over the next 10 years, I am confident from my perspective, the Palantir is going to be higher than $34, and I think the investment will do well. So it's really just a question of what is your time horizon. Valuations do matter, entry points do matter, so you've got to keep all that in context. But the story and the thesis also matters, and the story and the thesis is that Palantir is turning out to be one of the most exciting companies in the world. So there you go. Congrats. How are you guys feeling? I'm assuming this has been a fun day for some of you that have owned this stock. This has been a hell of a ride, dude. It's been a hell of a... Who would have thought this year 100% your day? My price target in January was $23. $25 was my bull case. That got smacked out the window. And the reason that got smacked out the window is because AIP started scaling. Again, the BP partnership today, that was an AIP partnership. That was not just the BP partnership. That wasn't just like a Foundry or Apollo thing. That was BP saying, hey, we want to use AIP throughout our enterprise, which means we're seeing the monetization of AIP. And then we also saw more government growth. So I think those are the two things that have propelled the company. Reacceleration of the government growth now at about 23% year over year, and 27% commercial growth led by the boot camps, which obviously have led Palantir to be one of the companies that has taken advantage of AI. At the end of the day, the Palantir thesis is that they provide value and they win based off that value, not off of gimmicks. And I am starting to realize that my investment philosophy is highly tailored around management, particularly if there's a founder. I love that because only a founder can really take a company to such great heights. Not that, managers that aren't founders can't be good CEOs, but really, if you're going to make a hefty investment in a company, not just like an option or a swing trade, I think a founder is very important, at least for me. And then the product has to be best in class. And if the product is best in class, which I think Palantir is best in class, and they're showing that they're best in class, you're going to get these 5-year extensions like we get with BP. Lee, thank you for the $5 super chat. You say thank you for your work. Thank you, Lee, for being here. Thank you guys every day for joining. Really means a lot. And let's keep going on this amazing journey. Okay, cool. So we had Palantir. After the bell, we've got a bunch of things. We've got Robinhood metrics for August. What am I expecting for Robinhood metrics? To be honest, I don't know, but I think those metrics are going to be pretty exciting. This was the July metrics. I'll give you a quick recap of what I think could happen. So in July, they added 70,000 accounts. I think we're probably going to add 50,000 in August. Assets under custody, 144 billion. August was a great month, even after the downturn. I think we get closer to like 150-ish, maybe 147-ish. So I think we'll probably have $3-4 billion in the month of August. Net deposits, dude, I don't know. We added $500 million in one day on August 5th. So the idea that we have $4 billion in deposits, which means, and they also added $1 billion for the first week of August. So we know we're going to have $1 billion. The question now is, hey, do we have $4 billion? Because that would be the fourth month in a row, not in a row, but fourth month in total. We had April, June, and July having over $4 billion. I think it'll happen. Dare I say we get closer to the $5 billion range if August, people really bought the dip. I don't want to get that excited though, but I think $4 billion will happen. Cash sweep probably crosses over $22 billion. Options contracts traded, I'm expecting another 160 million, which will be up 20% from last quarter. Equities, I'm expecting around 100 million as well, or 100 billion in equity notional trading volumes. Crypto, I'm expecting to nosedive. I'm expecting 3 billion. And that's very conservative, but I think that's probably what's going to happen. I don't think crypto had a good month in August. Bitcoin is doing well right now. Bitcoin, Palantir at 3450, by the way. Bitcoin, 57,000. Wow, Bitcoin up 3.4%. So Bitcoin's doing good, but I think August kind of sucked for crypto, so I don't think it's going to be great in terms of the notional volumes. And then margin book, I think this could get to 5.7. And they slashed industry margin rates to the lowest in the entire industry at 6.75%. I think they're giving out a lot more margin. That's a massive opportunity in terms of their net interest income. So I think margin could get us closer to 5.7. I don't know how the stock's going to react. Last time the stock didn't care. It was flat. And the next day it opened up 7% higher. So we'll see what happens to the stock. But overall, I think those metrics are going to be important. And that's going to be at 405. On top of that, Robinhood right here on the day is up about 3.17%. On top of that, we also have Oracle, which is one of the biggest players when it comes to AI. A lot of people don't think of them as an AI play. They are down 1.4%. I think they're going to crush earnings, but their stock is up 44% year to date. So I think they might be priced for perfection, and the street, 34% year to date, not 44%. The street might say, hey, we like you, but we're not going to be able to continue buying the stock. The question to me is, how big can they scale the AI training business that they have and increase remaining performance obligations, which was up 44% last quarter to 98 billion. I think if they increase that on the top line, the street might be happy, and hopefully guidance increases from that as well. But I'm not sure. I mean, the stock's up a lot. It's a $400 billion company. It's just going to be a question of how much can they grow for the street to get excited. Larry Ellison, the co-founder of Oracle, the guy's net worth is 175 billion. I found that out today. He owns 40% of Oracle. Talk about a founder not giving up control of his company. So we had some good stuff coming out of Oracle last quarter. Let's see if that can continue. And then finally, today we had Apple. I want to quickly play just a little clip letting you guys know everything that happened with Apple and if they made a difference. Let me know in the chat if you thought it was good. At 4 o'clock to around 4:15, we're going to have a lot of breaking news, but this is what we had on Apple. I'll analyze it more after some of the updates we get. But they announced a bunch of things. So let's get an update right here on it right now.
Devices built for AI. Let's bring in Adam Parker of Trivariate Research, Alex Kantrowitz of Big Technology, Bryn Talkington of Requisite Capital Management, and our technology correspondent, Steve Kovac, who is on site. And Steve, let's start with you there. You went in there with your kind of checklist of what we might get in terms of detail. We now know what Apple has unveiled. Were there any surprises? Was there anything you felt maybe you expected to hear that you didn't?
That front, Mike. And this is something that Apple is calling visual intelligence. This is going to be a unique feature on the iPhone 16 lineup that was just announced. And going into today, that was something I was looking for. Is there going to be a sort of unique AI feature that you're only going to get on the iPhone 16 and not the older devices? Visual intelligence, according to Apple, it's this thing where you can, whip out your camera, take a picture of something in the real world, and it'll give you information about it. The example Apple did, for example, was you take a picture of a restaurant, it'll show you the menu, let you take a reservation, things of that nature. This is nothing new, though. We've seen similar technologies from Meta, which is embedding it in those Ray-Ban glasses. We've also seen Google do something similar and OpenAI. So nothing new, but again, new for Apple putting it in there. And then the other thing I would note is this, still a lot of questions remain after today, Mike, about the rollout of Apple Intelligence and when we're going to see certain features and when. We do know after today that, after recapping some of the same features that they did 3 months ago when we were out here back in June, they still don't have a very strict timeline from when everything is going to be available, they said.
And that's the problem. And I think that's why the stock is selling off. Now, I am not going to be one of those people that says, oh, look at Apple. They don't innovate. Look at their stock. The street's selling off because the street doesn't care about it. And the reason I'm not going to say that is because the stock's kind of recovering right now. I think this is a sell the news event, but I don't think it will continue to be sell the news. This is exactly what happened on WWDC. As you can see, Apple's fighting to go green right here at the close. Apple sold off on WWDC, even though they introduced some interesting features, but then they ended up going green. Now, I'm not going to lie, nothing was super exciting about the iPhone 16. The GPU and the A18 chip, that stuff was cool. There's new buttons on the side where you can do stuff 30% faster than the CPUs in the iPhone 15. We got some new colors as well. But the Apple Intelligence stuff, the stuff that I was talking about this morning that I'm really looking forward to, all I saw were meeting and email summaries, aka the summarization of text throughout your daily workflow, which is important. It's not like that's not important. It's just that's not the most interesting thing. So this is when, Apple got to 217 on the day. I think it's fighting back right now because the street's being a little bit more patient with them. They think there will be an upgrade cycle. I don't know if that's going to be the case, but I'm not going to count Apple out. However, Apple just turning slightly green on the day. I did not see the massive use case yet. And maybe towards the end of the month in October, they have more software updates and we're going to see a lot more of those use cases, but so far have not fully seen it. And because of that, it just wasn't the most exciting event. There were some updates to the headphones. They have this new spatial audio architecture that they put in where there's headset chips inside to match the vibrations of the room that you're in. I thought that was kind of cool. I'm not going to pay $250 for those headphones though. So not something I'm going to be buying. Air Pro Max, the headphones did not get an update, just got new colors. Palantir right here at 34.67, got the market closed in about 45 seconds. And they have the new watch. Now the watch had some good features around health. I thought that stuff was pretty bullish and cool. But the overall phone, which is 50% of Apple's revenue, 45 out of the 90 billion they did a couple quarters ago, which came from the iPhone. That to me was not that exciting. So we'll see how the street reacts over the next couple of days, but didn't really get the AI super upgrade cycle vibe. But, maybe that ends up happening as we get into the holiday season, and we'll see how the street ultimately reacts to that as well. All right, folks, here we go. We've got 10 seconds into the market close. It looks like Palantir is about to close at a 52-week high, and it's just been incredible to see what they've done throughout the year. And obviously post S&P 500, 4 p.m. Monday, September 9th, the stock market is now closed. All right, folks, markets closed 34.59 on the day, 14%. I don't remember the last time we had a 14% day in a while. I think it was it wasn't the last earnings. It was the earnings before that, or no, the 2 earnings ago, like Q1 or Q4 2023. I think that day we had a 20% day, but it's been a while since we were up $4 in a day. And Palantir went from $30 to $34.59, which is pretty damn incredible. Congrats to longs. Let's see what happens tomorrow. Macro CPI news might be good. Maybe CPI takes it to 35. We'll see what happens. It's pretty damn close to 35. So as long as it can maintain this momentum and the macro holds up, might not be the worst day. S&P 500 up 1% on the day, 546. So we got a nice rebound on the S&P 500 as well. QQQ up 1.3%. Tech led the way with a little bit of a rebound as well. Let's go to the Max 7 right here. Microsoft was up about 1% on the day. Apple, again, ended basically flat, but it ended green. Meta up 1%. Google down 2%, 149. The DOJ stuff, we'll talk more about that in a bit, but that's why they were down today. Amazon up 2.3%. NVIDIA up 3.54%. And then Tesla right here up 2.63% of the day. So tech did lead the way. It's encouraging to see the market buy equities after the worst week of 2024. So we didn't have that much more pain today. We'll see what happens over the next couple of days, but we do have a bunch of catalysts this week with CPI and PPI. If those numbers are good, the Fed's obviously going to cut, market them prices in, hopefully stronger earnings growth with either 25 or 50 bips, and we'll get to see how the market reacts. Robinhood right here, 1966. In about 4 minutes, we are going to get Robinhood metrics. So in 4 minutes, I'll take a look at what those Robinhood metrics look like. We got Cypher that did well today. MicroStrategy was up 9% because Bitcoin was up 3.2%. Coinbase right here up 5% of the day. CleanSpark up 9% as well. And then you got Hut 8 Mining up 10.7%. Bitfarms as well up 8% on the day. The Bitcoin 2x leverage fund, BitX, that was up 13.49% on the day. Is Oracle out yet? I don't think Oracle's out. I think it's going to take a little bit. Oracle, we have a 1% candle. Let's see if we actually have the numbers. I think Oracle kind of takes till 4:15 if I'm not wrong, but if anyone has it, let me know. Oracle right now. Oh, Oracle just announced something. So Oracle and Amazon Web Services announced a strategic partnership. Oracle and AWS announced today the launch of Oracle Database at AWS, a new offering that allows customers to access Oracle autonomous databases on dedicated infrastructure and Oracle Exact Data database services within AWS. Okay, so we got an announcement from them. Don't have the earnings yet, but we do have an announcement right now. Stock is really not moving after hours. I think Hood and Oracle are going to happen at the same time. I'm going to give a little bit of priority to Robinhood because we really care about those metrics. So we'll see what they turn out to be in a second, but we will cover both of them as they are breaking. So that's the Oracle partnership right there with Amazon. We'll dive deeper into that. It seems, it doesn't seem that exciting. Oracle partners with all the hyperscalers, so I imagine this is just an extension on some of the stuff they've been working on, especially when it comes to AI workloads as well. Okay, so still no press release from Hood. Should be here in a couple of minutes, about 2 minutes, to see what happens. Where is Palantir after hours? Again, Palantir up about 14% of the day. Oracle's up slightly, but the numbers are not out. Palantir down just slightly after hours. We do have Matt Babin, who's speaking at Yahoo Finance. I think I'll be able to pull up that video. He just did that 15 minutes ago. So I should be able to get that video, and we should be able to hear from him on the extension that he made with BP, or that Palantir had with BP, but he's obviously leading the energy business at Palantir. So we'll see what stuff he has to say on that. Palantir right here, 34.59, basically flat after hours. Apple's up a little bit. Bitcoin, nice spike to 57,000 today. I didn't expect us to get there. 52,000 was the dip last week. And so let's see if we can hold 57. And then in about 1 minute, we'll get Robinhood. All right. In about 1 minute, we'll get Robinhood. Robinhood closed 1966, up 3.8%. It's up slightly after hours. Not sure if these metrics will have an impact on the stock, but I'm very curious to see what these metrics end up looking like. NEO had a great day up. NEO was up 11%. I agree. NEO had a very strong day. If anyone sold, let me know if you sold covered calls. The $49 covered call for like February was giving you $1 of premium. I know it's crazy to say Palantir is, might be $49 by January or February. That is kind of intense, but given how the stock's acting, who knows? But if you did sell the $49 covered call, which somehow opened up on the option chain, you did get a decent amount of premium. So let me know if you sold any covered calls today. As well as the stock came in higher. Oracle's not out yet. I think Oracle's more 515. Oracle's not out yet. Not seeing those numbers. So still waiting. Yeah, still waiting on Oracle. Oracle's not out. Robinhood should be out very soon. Updating the page. Don't have it yet. Monthly metrics. Yeah, do not have it yet. Should be up in just a little bit. And then we'll see. Nothing, no movement on the stock right now. Palantir down just a little bit after hours. Stock's up a little bit green for Robinhood. Oracle is up 1%, but again, no metrics yet out for Oracle. I sold 12 calls today, December 45 and February 46. Yeah, I think that's, I mean, look, if Palantir is $45 by December, is that possible? Yes. Will that happen? You know, the valuation is just going to really get up there, even if we grow at 30%. So I don't know if that fully can be justified numerically. But in general, that is a little bit more of a safer call, but you know, we'll see. Covered calls so far this entire year haven't been the most safe for Palantir. Oracle is out. Okay, let me get the Oracle numbers. Robinhood is still not out yet, so let me do Oracle. All right, 139 on EPS. Let me go to that on the chart right now. Oracle's up 2%. All right, 139 versus 133 expected. Revenue 13.3 billion versus 13.2 billion expected. So they beat on the top and the bottom. Cloud services 10.52 versus 10.5 billion. That's a beat. Hardware 655 million versus 690. That's a miss. Cloud license 870 million versus 760 million. That's a big beat. Services 1.26 billion versus 1.32. That's a miss. And then they have a partnership with AWS. Stock is up 3% right now, so the street likes it. Robinhood's out. All right, here we go. Robinhood is out, folks. Here we go. It's time to see what we got on Robinhood August metrics. Accounts, they added 60,000 accounts month over month. Assets under custody went down just a little bit by 1%. Net deposits, 3.3 billion. Interesting. 3.3 billion is not that 4 billion number that I thought they could have got to. So we have 3.3 billion in August. Cash sweep now at 22.8 billion, which is not too bad. Equity volumes were 96 billion. Option contracts were 146 million. Crypto was actually up 5.4 billion. Margin went up slightly, 5.5 billion. Okay, so where's the movement on the stock? Right now, Oracle is up a little bit more. Robinhood is down by about 0.18%. Initially, taking a look at the metrics just from a bird's eye view, not the most amazing metrics. So funded accounts, 60,000. That's normal. That's fine. Assets under custody probably went down because August was a tough month. We did have a rebound at the end of August, but it was down from the July highs. So that makes sense that that's down a little bit. Deposits is interesting. The reason I think deposits came in at 3.3 billion, even though they had 500 million in the first month of, or sorry, the one day in the entire company, is because it's net deposits. At the end of the day, some people take money out, right? And so when you had that massive collapse on August 5th, you had probably a lot of people taking some of their money out of their brokerage, just raising cash. And you also probably had some people taking profits and then kind of tax loss harvesting, also taking that money out of the brokerage. So interesting to see 3.3 billion. That one is surprising. I thought we would get closer to 4 billion, especially when they had $1 billion in the first week of August, but I would imagine some people took out that money. Cash sweep makes a lot of sense. 22.8 billion. That's up by 900 million. That's incredible. So that should be good for them. Yeah, we got someone in the chat saying I took money out of Hood. I'm imagining other people did that as well. Options contracts did come down at 146. Now that's still above the 131 level in June. I'll do the math on that and see what revenue that translates to. So that is much higher. I mean, in Q2, we averaged 130. So we had 16 million more than everything we had in Q2. But 160 million was the top in July. Seems like that number hasn't been reached. Margin balances, I thought this would be at 5.7 or 5.8. That's at 5.5. So, I mean, not amazing. It is up 2%. It's up 57% year over year, which is fine. Crypto, I'm shocked. I thought crypto would be at like 3 billion. Crypto somehow went up. I don't know how crypto went up, but crypto went up. So kind of a mixed bag. And then equity notional volumes, I mean, this is pretty much on par. 96 billion versus 104 billion, $8 billion less. Equities really don't make that much money for Robinhood at the end of the day. So you want to see that number to be good, but you don't need that number to be explosive. That number is higher than most of the values we got in Q2, just slightly below the July metric. So it seems like July was one of their best months. August is a good month. It's not a great month based on how I'm looking at these metrics. And that's what we got right now in the context of Robinhood. Why wouldn't you just leave the money in Hood account to collect 5%? That's a good question. Don't really have an answer for that right now, to be honest. But that net deposit number, that is a bit surprising to the downside. I thought it would be closer to 4 billion. Look, 3.3 billion, to put it in context, SoFi did 3 billion in one quarter. Robinhood's doing 3 billion in 1 month, right? So there are levels to the types of deposits they're getting. But for some reason, people took out more money, most likely, or they just didn't put in that much money in the month of August. And that's why we had a little bit of a decline right here. This is the lowest month they've had all year. Think about that. August was the lowest amount they had all year. Every other month, they had at least 3.6 billion. So this one is down a little bit right now. All right, so that's what we got on Robinhood stock. I'll see how the stock reacts tomorrow. I don't think the stocks are really going to react off these numbers. These numbers aren't explosive to get the stock into that higher level. So we'll see tomorrow. Maybe it reacts positively, but if not, that's understandable. Oracle right here up 5.87%. Let me get some more coverage on Oracle and see what is happening with Oracle. Why is it pumping right here? And what else did they say? People were prepping for September. Yeah, that's fair. People were prepping for September, and September is usually a bearish. But again, that doesn't answer the question. Why wouldn't you just raise cash and kind of just keep it in your brokerage versus take it out of the brokerage? So that it's one of those things that I'm a little curious about in terms of how it's going to play out. But that's still something we need to look at a little bit more. Let's get an update on that Oracle Microsoft partnership, Amazon partnership, and then we'll get into their actual earnings as well.
And flexibility that they want. Amazon and Oracle are seamlessly connecting AWS services with the latest Oracle databases. A quote here as well from Matt Garman, the new AWS CEO, says as far back as 2008, customers could run their Oracle workloads in the cloud. Since then, many of the world's largest and most secure organizations are using Oracle software in AWS. So this is closer ties with AWS and Oracle. Of course, Oracle is reporting earnings today after the bell. You can see here shares of Oracle down slightly on this news. Amazon pretty much flat after hours. John, back to you.
Those Oracle results, I believe, are out, and we are going through them. You know what else is down after hours? The temperature.
Okay, here we go. We got Oracle. Let's take a look at these numbers. Again, this is a very important company when it comes to artificial intelligence. GAAP earnings per share up 20% to $1.03. Q1 total revenue $13.3 billion, up 7% year over year. Remaining total performance obligations up 53% to $99 billion. That's up $1 billion quarter over quarter. Went from $98 billion to $99 billion, up 53% year over year. That's primarily led by AI training in the cloud. So that's important. Cloud revenue, $5.6 billion, up 21% year over year. Cloud infrastructure revenue, $2.2 billion, up 44% year over year. Cloud application SaaS revenue, $3.5 billion, up 10% year over year. Fusion Cloud ERP revenue, $900 million, up 16% year over year. And NetSuite SaaS revenue, $900 million, up 20% year over year. So you got double-digit growth in all parts of the core business, with top line growth at about 7% for the year. CEO, here's what they said. As cloud services becomes Oracle's largest business, both our operating income and earnings per share growth accelerated. Non-GAAP operating income was up 14% and GAAP EPS was up 18%. RPO was up 53% for a record $99 billion. The strong contract backlog will increase revenue growth throughout full year 2025. But the biggest news of all was signing a multi-cloud agreement with AWS, including our latest technology, Exadata hardware, and version 23 AI of our database software embedded into AWS cloud data centers. AWS customers will get easy and convenient access to Oracle database when we go live in December later this year. Stock right now, Oracle up 5% on this news. Some more from Larry Ellison, CTO. Oracle has 162 cloud data centers in operation and under construction around the world. The largest of these data centers is 800 megawatts and will contain acres of NVIDIA GPU clusters for training large-scale AI models. In Q1, 42 additional cloud GPU contracts were signed for a total of $3 billion. Our databases business's growth rate is increasing as a result of our multi-cloud agreements with Microsoft and Google. At the end of Q1, 7 Oracle Cloud regions were live at Microsoft, with 24 more being built, and 4 Oracle Cloud regions were live at Google, with 14 being built. Our recently signed AWS contract was a milestone in the multi-cloud era. Soon, customers will be able to use the latest Oracle database technology from within every hyperscaler's cloud. There you go. That paragraph, pretty damn serious in terms of what Oracle thinks about their AI growth. The fact that they have RPO at $99 billion, up 55%. I mean, that's just absolutely incredible metrics in the context of their numbers. Stock's up 5%, so I guess the market is willing to give Oracle even more of a premium. Oracle stock year to date, the highest they got to was 144. Right now, it's 147, so it's at a new 52-week high after hours. Dipped all the way to 128 on August 5th. At the beginning of the year, it was at 104, so it's obviously done very well this year. But the street seems to be happy, at least so far, with the current results that Oracle is putting up. Let's see if we have some more coverage right here on Oracle. No, they're still talking about Apple. Okay, so we'll get to them in a bit. But yeah, Oracle, not bad. These are good results. SolarEdge down. I don't think they had earnings today. SolarEdge down 8% of the day. Yeah, I'm not sure they had earnings. Probably there's something else that happened with the company and why they're down. but SolarEdge is down. It will be interesting to see if Oracle mentions Palantir again. They signed a really big agreement with Palantir back in April of 2023. I remember the stock pumped to about $23.45 that day, which was amazing because it was stuck at $20. But this is a different ballgame now that we closed at $34.60 on the day, up 14%. Let's do a poll in the chat. Let's gauge the sentiment on how you guys are thinking of Palantir. So the question is kind of going to be simple, which is, do you think Palantir can hold 34 for the next month? Let's call it the next month. Let's see what you guys think in the chat. Do you think 34 is sustainable? I know a lot of people are excited about this. I actually got some emails today of people saying, hey, this is awesome, but I don't know if it's sustainable. And I understand that cautious skepticism, but we're going to see Q3 earnings reaccelerate revenue, and then the street's going to have to decide, hey, is this worth paying 31 times price of sale? Bitcoin right here at 56,000, S&P 500, 546 on the day. Google down 1.57%. Tesla did end green. IWM, ELF, by the way, had a horrible day, down 7%. They launched a partnership with Tinder. I don't know what that really does for the company, but that's why, I don't know if that's why they're down, but investors just weren't happy about that. IWM up about 28 bips on the day. Celsius, great day, up 4.47%. Celsius went green, Google went red. So we saw a little bit of a divergence there. Robinhood now basically flat after hours. Palantir right here, 34.63 after hours as well. All right, so 53% of you say it is not sustainable to hold $34 for the next month. 47% of you guys say that it is sustainable. I agree with Philip right here. We are nearing price discovery. We have not had, if we just look at the 5-year chart, we have not seen 34 since February 2021. And February 2021, this company was a very different company. So I think as we crack above 35, if we can get there, then we're going to start to see some real price discovery, especially based on the volume shelf resistance that is not really that heavy at that 35 to 40 range. And then it'll be a fight for 40, and the market's gonna have to figure out, hey, is the company doing about $2.7 billion in revenue worth paying an $80 billion market cap for? Right now, it's basically $80 billion at $77.5 billion. So market's gonna have to make that decision. But all Palantir can do is keep executing, and if they do, hopefully we will have some more momentum. What's wrong with Google? So the reason Google's down today is because their antitrust case is officially starting in terms of court proceedings. I don't know why that's a reason to drop it 2%. Like, everyone knows what the courts have already said about Google. But again, that's the overhang that's had on the stock. And until Google settles with the DOJ, which I think is going to take them some while to do, then you're probably going to have that overhang last for a little bit of time. All right, here's some Oracle coverage that we're getting right now.
Things that you mentioned are out. We got the numbers for you. Deirdre Bosa has them. Deirdre.
Hey, John. So shares were up as much as 6%. They're now sitting around 5% up in after hours trade, beating on the top and bottom lines. Earnings per share coming in at $1.39. $1.32 is what the street was looking for. Revenue also coming in stronger than expected, $13.3 billion versus $13.2 expected. We have to wait for the conference call for guidance estimates to see if that's going to be updated. We also got an Oracle and Google Cloud partnership on the back of it, announcing that Amazon partnership as well. Something else investors were looking at is the cloud infrastructure business revenue at $2.2 billion. That's up from $2 billion last quarter. This is seen as one of the fastest growing areas of Oracle. Larry Ellison, the executive chairman of the board, quoted in the release saying that in the first quarter, 42 additional cloud GPU contracts were signed for a total of $3 billion. He also said that the recently signed AWS contract, he calls it a milestone in the multi-cloud era. He says soon customers will be able to use the latest Oracle database technology within every hyperscaler's cloud. So that was the last one. So it's now operating Microsoft, Google, and now Amazon.
Hyperscalers, yeah, they're the name of the game. I mean, I'm still thinking about all the trash that was going back and forth, particularly in Oracle's direction toward AWS just a couple of years ago. But that's all in the past. There's money to be made. D, thanks. Shares of Palantir and Dell rallied today on news that they're going to join the S&P 500 later this month. CNBC's senior markets commentator Mike Santoli joins me now with a look at what typically happens after stocks are added to the index. Mike?
Okay, so let's listen to this because this is actually a good segment. And then we're going to listen to Matt Babin. He's on Yahoo Live speaking about Palantir's deal with BP.
Well, John, the initial reflex, very understandable, right? You're going to have, I don't know, trillions of dollars in some respects in price-insensitive buying that goes into the S&P 500 index. Obviously, they're going to get a portion of it, the new entrants will. But this is a map of overall, if you look at all index inclusions in the S&P 500 over time, and the path that it takes going into the announcement date when it's going to go into the S&P, and then, of course, the inclusion date. It's going to be in a couple of weeks from now when they actually enter the index. And you see that usually the stocks have been on an outperformance trend. This is excess return that's being measured here relative to the index, and then kind of gives it all back over the course of, let's say, 100 days. So essentially, you do get that initial bump, at least because of the perception that they're now going to be recipients of all of this index ownership, which is 15% plus of all, equity fund ownership right now. And yet it doesn't necessarily last because obviously fundamentals take over from there. Now, one prominent example of this would be Tesla, when, of course, it was tremendous excitement around Tesla as a business, but also as a stock that was becoming kind of a bellwether of the growth world, Magnificent Seven and all the rest. This is a 5-year chart. When did it go into the S&P 500? Well, it was in December of 2020. The price was around 231. Obviously, it went up huge from there, close to doubling, I guess, from right before the index inclusion. And then it's kind of giving it all back. So in other words, there's no magic longer term to being in the index at this point, John.
Well, it seems like chewing gum. Like there's a trade there. The flavor just doesn't last forever. If we go back to that first chart, it looks like if you're in there for a little bit before, and then you're in there for a little bit after, you tend to do a bit, well, let me see, average new entrant, median new entrant. Am I reading that correctly?
Yeah, you're right.
Yeah.
No, that's exactly right. I mean, there's still something to actually benefit from there. But, and that's why there is this parlor game. It's a quantitative one. You can look at the biggest companies not in the index yet. Do they meet the inclusion standards? You might as well speculate that maybe they'll go in as the S&P refreshes the index. By the way, interesting thing is, the reverse also works with S&P stocks booted out of the index. It basically looks like a U. So it's kind of like you get thrown out at a lower price and tend to migrate higher, or at least revert to the mean after you've been out of the index.
All right.
So on this chart, the announcement date, you guys can see right there, it pumps up, and then after the inclusion, it slowly comes down. I mean, look, could that happen for Palantir? Sure, but Palantir could also just fall for a variety of other reasons. Maybe their earnings isn't the best in Q3 or whatever it may be. But historically, I guess you could say that stocks are a little bit more volatile after they get into the S&P 500. We did see that this year with SMCI and CrowdStrike. Now, again, if the macro holds up and Palantir can continue the momentum in terms of reaccelerating revenue, I think the street will be happy. But the question is going to be, can they continue that growth? And if they can, then we'll see how the street reacts to it. Now, part of continuing that growth is signing new partnerships. Here's Matt Babin giving us some details on this new 5-year extension with BP. Let's hear from him. He's the global head of energy. He was nice enough to join the stream last week on YouTube that you guys probably listened to. So let's hear from him now on this new contract.
Palantir shares rising to a 52-week high and now up more than 100% so far this year. On Friday, it was announced that the software company will be joining the S&P 500. Analyst at Wedbush saying this is, in their words, a validation moment for the company. And meanwhile, today, more news. Palantir and BP announcing they have signed an expansion of their partnership 5-year deal in which the oil giant will use Palantir's AI software to improve and accelerate decision-making across the company. Here with more is Palantir's head of energy and natural resources, Matt Babin. Matt, great to see you.
Thank you for having me.
So let's start with that news. So expanded partnership with BP. So the oil giant uses Palantir's AI software, improve, kind of speed up decision-making across the company. Matt, walk us through exactly what that means, though. Are there examples you can give us, kind of illustrate, okay, I'm a BP engineer, how this helps me?
Yeah. We've been working with them for more than a decade. And I think, as the release states, we've sort of worked on, you can think of their business as a complete connected value chain, right? From reservoirs underground up through their facilities, onshore or offshore, all the way to a refining or processing facility, all the way to an end customer. And so what they use our software for is all of the decisions along that chain. That's a complicated chain. And you can think of each decision you make along the way actually changes the decisions you can make downstream, right? So if you make one decision, that changes all of the other options that are available to you. What's new with this extension is layering AI on top of that underlying digital twin model of the entire business.
Gotcha. So it's extending in time, but also extending in scope of what you all are doing for BP.
Correct. Yeah. So you can think of it as two main things. One is it connects people who have different area disciplines. So if you're a reservoir engineer and you're paying attention to what that subsurface reservoir is like, that's much different than sort of an operations or a base management engineer thinking of how could I change the performance of this facility. But this gives you one pane of glass to look at and collaborate over that. So that's one thing where it enables people, without sacrificing any specificity of the questions they're asking or the work they're doing, to work together. The second is, how can you then run hundreds, thousands, millions of simulations on top of those questions you're asking in a secure way?
And one question I want to ask a question on the street, Matt, for you particularly, in the energy segment, you're dealing with these energy companies. Is it often kind of one-time engagements, or no? What you're seeing is typically these are really now converting into long-term recurring revenue.
Yeah, I think the duration we've been working with them, a decade in, and we're signing up for 5 more years, says that these are long-term deals. We've founded the company to work on hard mission-oriented problems, and those are places where our customers make decisions every single day. So, we've talked a lot about these boot camps, which are sort of 1 or 2 days, but then lead to long-term duration contracts.
Well, and we talk a lot about AI and sort of, obviously with the advent of large language models, there was a lot of talk about transformation, right? It sounds like what you're talking about is, and not to diminish what you're talking about, focused on efficiency, focusing on making operations better. Mm-hmm. Not that that's not going to be transformational in the longer term, but it's not like this sort of, overnight kind of change to the business.
Yeah, I think that's a good distinction. I think if you look at a lot of industries, energy being one of them, maybe 5 or 10 years ago, everyone was saying, I'm going to do a digital transformation project. Mm-hmm. And that's sort of like, well, why? Right? What's the real business problem you're trying to solve? And I think over the last 2 years, you've seen a lot of that in the AI space, right? I'm going to AI this problem. And we take we're contrarian in a lot of ways, but we take the view of, well, what's the core problem of your business, right? If the core problem of your business is, how can I produce more energy with safe operations and reduce emissions? That's the problem, right? And then the question is, how can I use technology, including AI, to improve the way I tackle that problem? And so, yes, on the edge, I think those look like marginal improvements, but if you get 1% better at what you're doing every single day, that's how we think you transform your core business.
And when you signed this expanded partnership with BP, Matt, I'm just curious, was there competition there? Was that a bake-off?
I think there's competition in software all the time,
yeah.
Right? I think your previous guests were speaking about sort of what everyone is trying to do in the space. The most frequent competition that we see are, I think in energy in particular, there was largely a choice between 2 ways of working. You could go to a hyperscaler and sort of have a horizontal infrastructure system when everyone went to the cloud and then cobble together individual components of that yourself. Or you could buy bespoke software that did one particular thing. And what we do is say, you shouldn't have to make that choice. You should be able to scale while also being able to solve specific problems. You have PhD level experts in all of these component pieces of that workflow. They shouldn't have to trade off the power of their knowledge because of the tool set that they're using.
At some point, are there diminishing returns from, in other words, if you are improving efficiency analysis of a reservoir, for example, at some point you've done it, mm-hmm. right? So then what?
Yeah, I don't think there are yet. And I think you can look at that in terms of, great, so let's take that example on the reservoir, right? The rocks are the rocks, right? And there's only so much you can do with those rocks. But if you can free up more time for people who are managing that asset to go do more exploratory activity, right? If you look at the sort of generative space of going into, well, what does carbon capture look like? What does using these reservoirs and these storage caverns underground look like for sort of new parts of the energy transition problem? I view it more as, I'm an economist by training, so it's what's the opportunity cost of spending time? So even if there's diminishing returns to one particular problem, you're freeing up more time to tackle new problems and add them into the mix, and that's what we see our customers.
Matt, there are companies out there who would certainly like to compete for your customers, right? These companies, Microsoft, the Databricks, they're putting real effort into this. How do you see just the competitive landscape kind of evolving from here?
Yeah, I'm more focused on what we do than what other people do, because building great software takes your entire focus, I think.
And what do you think are your competitive advantages there?
I really think it's the depth and time we've put into the ontology, right? If you look at, again, let's use the example of BP, that pressure system, that's not just the nouns and the assets that they use, that's all the verbs between them, right? The actions that you take, the decisions that you make as a company. And so building that flexible framework for a data model for the way your company does business, if you do that part right, then you can layer anything on top.
I want to come back to what we were talking about in the beginning, that you guys are being added to the S&P 500, which I know is not in your purview, doesn't affect your day-to-day, but we were talking in the break just sort of about that milestone for the company. Is that something you guys are sort of talking about internally, excited about, or are you just really focused on what you're doing?
I mean, of course it's exciting, right? It's a big piece of news. There's three different ways that I think about it. I think the first one is just keeping it in the energy domain, right? The energy space is full of standards, right? There's safety standards, there's construction standards, and the rigor around meeting those standards is pretty high. I think the rigor that the index keeps on getting in is equally high. And we used to get asked all the time by energy companies when we were smaller and younger, okay, great, the tech looks fantastic, but I make decisions on decade timeframes. I'm going to be operating this field for a generation. Are you still going to be around? And I think that's sort of a signal to the market as a whole, but particularly in energy, like, yes, like we've met these standards and we're here to stay. I think the other is, someone who came out of the government space, who worked on the government side of our business, you don't have to choose between being a mission-oriented company and being a commercially successful company, right? We haven't sacrificed anything on our mission and our intent on the work we do on that side. As a personal employee, the work I have to do today and tomorrow is the same as it was if the announcement had been different on Friday. So nothing there changes at all.
Matt, thank you so much for joining the show today. That was great. We appreciate it.
Thanks for having me.
There you go, folks. Matt Babin. We talked to him last week, and same energy when he was talking to us as he's talking to the Yahoo Finance people, explaining why he likes working at Palantir, why he stayed at Palantir for the past decade. Palantir right here, 34.55 after hours, down about 0.14%. On the poll I ran, we've got 740 votes. It's literally 50-50. 50% of you think 34 is not sustainable. 50% of you think 34 is sustainable. So I imagine some of you sold covered calls today. Some of you maybe bought some calls that are still out of the money today. But looks like the community is a bit split on if Palantir can hold 34. Now, this BP partnership, it's a big deal. I know it kind of got watered down today in the news because the stock ran up and then the Apple iPhone event thing happened. But I would encourage people, I'm going to make a video on it. It's going to come out in a couple hours, going a little bit deeper into it. But definitely encourage people to read the press release. BP basically saying, hey, we want to work with you for the next decade. Or sorry, for the next 5 years after working with them over the last decade, to me is a sign of big confidence. And it's a sign that Palantir is engaging with their clients as true entities that are developing a relationship with the company, that are actually getting their enterprises transformed, and that are finally starting to pay big bucks for AIP. And that's what you want to see in terms of that average revenue per customer, which I think right now is at like 3.2 million. You want to see that get to about 4 million in the next 12 months, because that should, support more top line revenue growth in the context of getting to 30% ARR. So not too bad. Not too bad for Palantir. And I think Matt Babin had some good thoughts right there. Palantir right here down a little bit after hours, 0.14%, up 14% on the day. Robinhood up about 0.25%. I'm looking at the results now, folks, going back to Robinhood, and we'll go a little bit more deeper into some of the other stuff we didn't get to talk about, like the iPhone event. I think the results are good, but it's definitely not great. And maybe I say that in a more naive way, because obviously these numbers would be phenomenal for any other fintech. But with Robinhood over the past couple of months, we got it spoiled a little bit in terms of really, really good numbers. And these numbers are good, but they're not like, oh my God, like crazy, crazy, crazy good. So take a look at this. This is the actual press release right here. Again, margin balance is up a little bit. Equity trading volumes are up. Crypto's up. Options are up. All of that is good. Security lending revenue also was down at 18 million. It's down 14% from July 2024, even though it's up 6% year over year. I think it is understandable in the month of August, where things tend to get a little bit more quiet in the markets, that Robinhood had a little bit less activity. And for the fact that August tends to be quiet, they're beating their April and May numbers by a sizable amount. So that's really good. They're just not beating their July numbers too much. So maybe I'm being a little bit too harsh on them because their July numbers were just stellar. Probably didn't have a chance to really match those July highs, given July, the entire markets were at an all-time high. But overall results are good, not great from my perspective. It's going to be interesting to see how the market responds to this. Last time they were up 7% the day after. So we'll see how the market interprets this stuff. The next big catalyst for Robinhood is going to be that October 16th event. And then after, that event is over, we'll see how the market kind of thinks of the trajectory of where the stock should go. Even with the metrics we got today, I think Robinhood's fair value is $25, given they have $5 billion in cash. So to me, my price target hasn't really changed on that. But we're going to have to see if the street can relate and if the rate cuts are ultimately going to be bullish for the broader market. Oracle right here pumping up 8.2% after hours. Look at that green candle right there, $152. I think that's an all-time high for Oracle, if I'm not wrong. Yeah, that's an all-time high. Oracle's trading at all-time highs, folks. Oracle just, I guess this earnings is something the street really liked. And they enjoyed some of this momentum. Amit, what do you think of Jonah L shorting Palantir? I have no idea who Jonah L is. I don't know if that's like a important person to care about, but my thoughts on anyone shorting Palantir is like, I think you're high on cocaine. I mean, like, I kind of agree with that. Dude, after the results that we've seen this month with Palantir, you could still argue the valuation is stretched, whatever, I don't care. But to be net short a company like this, I mean, all right, go ahead. Jonah Lupton. So, is he officially net short on Palantir? I know he had a swing position and he got out of it. Did he announce he's short today? That'll be interesting, dude. Is he actually short? I didn't know he was short. I haven't seen that tweet. If you have that tweet, let me know. I don't think he's not a guy that really shorts companies though. So I don't think he's shorting Palantir. I respect him. He's a good investor, but I doubt he doesn't like the valuation. I know that for sure, but I doubt he's actually shorting it because he doesn't tend to be a guy who shorts companies like that. But at the end of the day, dude, you could argue the valuation is stretched. I'm not going to disagree with that. I just think that this is a company you bet on the execution. And so far they've been proving the execution has been pretty strong. Celsius up another 1% after hours. Elf is up a little bit. Ulta was up 3.8% of the day. Probably got some money rotating out of Elf. Adobe was up 1.15. Let's look at the semis today. So NVIDIA led the way up 3.5, which was nice to see. AMD was up 3%. SMCI was up 6%. Intel was up 1%. Taiwan Semi as well up 4%. ARM got upgraded to $175 by Goldman Sachs today. They were up 7%. And then Dell, again, S&P inclusion, they're up 3%. Palantir was up 14% after S&P inclusion. Dell got a nice 4% bump, but until Dell has those operating margins that start to make more sense, I don't think Dell is going to get that much momentum as well. Okay, cool. Let's see if we have some more coverage on Oracle. And then I want to talk a little bit about Apple and see some of the stuff we have there. Oh, no, never mind. I was looking at something else. Yeah. So let's go on to Apple. Let's go on to Apple instead, and then we'll talk a little bit more about Oracle. So let me pull up one of the core analysts that cares about Apple, and let's see what he had to say. Ultimately, I want to know what you guys thought when it came to Apple. I did not think that event was amazing. I did think that the event was good enough for, I guess, the markets to kind of think that Apple has momentum when it comes to AI, but the majority of what I got from Apple was text and email summarization. And text and email summarization, I don't know if that's enough AI for the market to be excited about. So here's one of the core analysts that covers Apple. I think this guy has my name. I think this is the Amit guy. Let's see what he had to say about Apple. And then we'll keep going from there and see what else we have for what we're looking for. The other problem with Apple is, like, again, the watch was really interesting, but the headphones as well also, like, the watch and the headphones were cool. The watch was the coolest. The iPhone, I think, was the most disappointing in terms of new features. But if you care about professional videography, the iPhone was a little bit cooler as well, given some of the AI stuff they put in. All right, let's get an update on Apple, and then we'll keep going from there from Evercore.
Back to Apple, the company is expected to unveil its newest iPhones, watches, AirPods, a lot of different things today, as well as the latest in Apple intelligence. Joining us now to discuss is Evercore ISI's Amit Daryanani. He has a $250 price target, and as you'd expect, a buy rating as well. What do they have to do today, Amit, for you and other investors to be happy?
I think details on the Apple intelligence rollout, both in terms of the feature set, the Siri 2.0, if you may, does that come out in September or later? And then what's the scope of the geographic rollout of Apple Intelligence? I think are two things people are going to focus on, and those are the two ingredients, I would say, that will decide if this is going to be a super cycle in the next 12 months, or it's going to be potentially a bit more of a longer cycle. But those two things are, I think, what folks will focus on.
And what are your expectations? Do you think they're going to be successful? Earlier we were hearing from our own Steve Kovac in terms of at least presenting the use case when it comes to AI, given how early it would seem to be in terms of consumers actually using it for something they don't already have access to via their own apps.
Yeah, listen. I think the hardware upgrades on all these on all these phones are going to be fairly standard, right? The big differential is going to be this Apple Intelligence features. Our take would be the basic features they'll come up with, like summarizing your text messages, prioritizing your tasks, and all that. I don't think that's going to be enough to trigger a big iPhone cycle. So what you do need is a Siri 2.0 to come out. Apple has called the event glow time to really get folks excited about buying the next iPhone. Our sense, this might be a bit more of a longer cycle. So the way we kind of think about this is,
it's really funny. A lot of these analysts are coming out on the event day and they're saying, hey, it's going to take some time for the upgrade cycle, even though for the past 2 months they've been saying upgrade cycle. And now it's not just him. JP Morgan also came out with a note today that says, might take a little longer than we thought for the upgrade. And that's because I don't think they're really seeing anything to upgrade for. Again, he said summarization of text, which just might not be the most important thing.
it's unlikely a super cycle, but it may just be a super long cycle for Apple where you have multiple years of mid-single digit unit growth. You also want to pay attention to when do these features and Apple Intelligence gets rolled out in China and Europe, because you do need a broad rollout for this to work. But our gut, this is going to be multiple years of upgrades rather than one big upgrade that we've seen in historical super cycles.
So the one thing, and then I want to talk about Google and we'll get a little update on their antitrust case. The one thing here, again, he was talking before the event came out, then the event happened and basically matched his expectations, which is that it wasn't that exciting and they didn't really introduce anything that unique. I would say that I think those that said the Vision Pro is going to flop and it's going to be pretty stupid, like myself, so far we've been right. The Vision Pro flopped. It was stupid. There was no use case. It was very easy to not buy Apple stock just based on the Vision Pro. And if you bought Apple stock because of the Vision Pro, you didn't really do that well. I wonder how easy is it today to say the Apple AI phone is going to flop. I'm not taking that position because I don't want to bet against the AI iPhone. But from what I saw at the event today, I can't get mad at someone taking that position because there was just nothing exciting to upgrade to. Now, people might upgrade because they've been holding the same phone for 3 years, but in terms of like that killer use case, I didn't see it, dude. And if anyone saw it, let me know. They did not mention the Vision Pro the whole event. They haven't mentioned the Vision Pro on the past 2 earnings calls. Like, the Vision Pro is dead, dude. No one goes to the Apple store and says, I want to try the Vision Pro. No one's going to pay $4,000 with taxes for the Vision Pro. It's done. So, and whatever Gen 2 version they come out with, unless the batteries are so incredible where you can wear it without having a wire attached to you in a battery case, like, it's just done, dude. Spatial computing, no one cares about it. So I wonder if it's really that easy to be a bear on Apple on the iPhone and just say, yeah, no one's going to care about this. Because it was really easy for me to say no one was going to care about the Vision Pro. And I didn't feel like I was on an island saying that. I kind of felt like, yeah, it's like, no one cares about this. I can't say that yet about the iPhone, but I kind of want to say that because this event was a nothing burger. But I don't think I should say that because I think if they really nail Siri, then people will care more about LLMs. I'll probably be a daily user of it, which is, again, the reason I didn't like the Vision Pro is because I didn't see a daily use case. With Siri, there's a pretty easy daily use case. It's just a question of how integrated that's going to be into everybody's daily workflows. Okay, Google, let's get an update on them. Google is now officially in a bear market. It's down more than 20% from the highs. Here's why the stock is down 2% on the day, given the antitrust trial is starting to take place.
Ad tech battle could also change the very way we browse the internet. Deirdre Bosa has more for today's tech check. Deirdre, layer that in for us.
Yeah, so here's how it could change our own experience on the internet, potentially a better browsing experience. Let me explain. The government argues that publishers will have to find other ways. They currently have to find other ways to make up for hundreds of millions of dollars they would be getting if Google didn't allegedly destroy competition. So to maximize their own revenue, they might have to put more ads on their websites, making them more cluttered, or they put more content behind paywalls, all adding up to a subpar browsing experience for us, the users. So imagine a world where instead of scrolling through giant banners that are on autoplay, you just get the content that you're looking for. Or imagine you didn't have to enter your email address just to see a homepage. That's what the DOJ argues would be potentially fixed if Google's grasp on this market was loosened. Better monetization, better quality of non-Google websites. Others, though, including Google itself, argue that the browsing experience could actually get worse if there were more alternatives or if Google was broken up. It could fragment the ad tech ecosystem, make it less efficient, leading to worse data privacy and higher ad costs that would, again, be passed on to users, maybe just in different ways. Kelly, I don't know where you stand RE ad targeting. Some people love those well-targeted ads, say they're more relevant. I'm certainly in the latter camp. I find them creepy and annoying. This trial, though, could impact how we are followed around the web, which would, again, make for a different experience.
I think that's an area where people want a lot more information about what's going on, and there's still a sense that consumers don't fully know. Deirdre, wanted to point this out. While Apple is holding its product launch event right now, started just top of the hour, Huawei is holding a product event tonight right after Apple. And as we learned in July, Apple is no longer even a top 5 market share iPhone cellular device in China.
It has just been such an incredible sort of reorganization of smartphone vendors in China. As you said, Apple's no longer even in the top 5. Huawei has sort of clawed its way back up after being essentially left for dead after U.S. sanctions. It's now the number 4 placement, and it is growing faster than anyone else. The top 5, by the way, all local companies. Can't remember the last time that that's ever happened. So Apple has a lot to lose in China, right? It's one of its most important markets. And Huawei kind of upstaging the event today, the Apple event, with its own product event showing, Kelly, I don't know if you've heard this term, a trifold phone. So
I've never heard that.
Not foldable, it's foldable twice. So you get 3
That's kind of stupid in my opinion, though.
different screens layered on top of each other. And it has on its website sort of a ticker that shows you how many people have pre-ordered this phone. Last time I looked, it was at 3.2 million pre-orders and counting. So they're basically saying, you know, we are still going to dominate this market. We'll see, though, because all of this rests on the AI features. What are we going to get from Apple? What are we going to get from Huawei?
That's interesting, bro. Maybe that's a reason Apple was having some pressure on the shares. Maybe it wasn't just the event. I didn't know Huawei was coming up with a tri-folding phone, and almost 5 million people have pre-ordered it. Apple has not been doing as well in China over the past couple of years. I mean, there has been a lot of intense competition from the incumbents in China as well, and Huawei has been, really beginning to introduce some new AI features of their own, along with their own technology. So maybe that was a little bit of the reason why the street was upset with Apple. Apple right now, after hours, 221, so it's up 0.07%. Again, PE of 33 on Apple for so far 1 to 2% year-over-year growth. It's a bit expensive. They have the highest PEG ratio at 3.5 on the street. It's a lot to pay for Apple, and I don't know, dude. The streets really got to be convinced that this AI narrative thing is going to play out. And if not, I guess we'll see how the street ultimately reacts to it. Rocket Lab had a good day, up 5% of the day. Adobe right here up 1.1%. SMH up 2.26%. Where was Palantir after hours right now? Palantir right here down just a little bit, 34.49. Again, closed at 34.60 on the day, up 14%. Affirm down a little bit on the day. And Tesla as well had a pretty good day. Tesla right here at 216.27 on the day right now. Where's Oracle? ORCL. Wow, continuing to get momentum. 9.17% on Oracle. Didn't expect that, dude. I think Oracle put up good numbers. The numbers aren't horrible. I didn't expect the street to give them such a big reward for that. Granted, the stock did fall and it didn't recover that much since August 28th. So probably just getting back to where it was on the trajectory to get to. And they put up a decent amount of numbers to justify this. So you can't really complain if you're looking at what we have right here with Oracle. Let me see if I can get a little bit more coverage on Oracle and see if we've got anything else there. Let me know in the chat also if you own Oracle, if anyone owns it. I do not own this one, but I think it's definitely one of the more exciting ones with AI. Will Oracle give QQQ a good day tomorrow? Oracle's not in the even the top 10 of QQQ. I don't know what the position weighting is, but Oracle's not a big, from my understanding, it's not a huge AI leader. It's a huge AI leader, but it's not a huge leader in the Nasdaq ETF itself. But I guess we'll see. It definitely will help the Nasdaq. It's not going to hurt it. All right, we have some more coverage on Oracle. Let's take a listen to this. Let's try to see why the stock continues to rally.
A partnership with AWS. Let's bring in Alex Zukin of Wolf Research. He has an outperform rating, $160 price target on the stock, getting closer to that, Alex. First of all, explain to me the relationship between Oracle and the hyperscalers, because it was a quarter or two ago, I think there was another announcement that they were getting some of the overage business that the hyperscalers couldn't handle, and it seemed like the stock also responded positively to that, and now we seem to have a little burying of the hatchet, perhaps, with AWS, no?
I would even almost say it's like the tearing down of the Berlin Wall in terms of the rapprochement that you're seeing between Oracle and AWS. I think it's really, at the end of the day, it's a win for customers. I think ultimately customers have a lot of core workloads that are running on the Oracle database, and I think they have a lot of partnership opportunities these days in terms of where they want that compute, and they've signed very large, very long duration deals, and the ability to use the dollars, use the compute from your preferred vendor to run your most mission critical workloads. I think Oracle's making it easier. I think Oracle's figured out that there is a real advantage to being able to tell your customers that they can run their Oracle database workload and not worry about which hyperscaler they're using, maybe even potentially be able to run it on multiple hyperscalers, or have that be even something that you can kind of bounce one off the other. So I think it's an advantage for Oracle. I think they've been working really hard to get this type of parity between the hyperscalers, and I think they just announced it.
There's a weird effect happening right now, at least it's weird to me, in enterprise software. It used to be that we talked about names like Oracle, Intel, Cisco as being bellwethers for what was happening in enterprise. Now it seems like AWS, Google Cloud, Microsoft Azure are sort of market makers in the sense that you have to deal with them. We're looking at their capital spending along with Meta as an indication of what's going to happen with semiconductors. We're looking at them as a marketplace for being able to access applications in the enterprise. Well, what's happening in there, and what should we perhaps read into Oracle's relationship with them from that perspective?
Yeah, I think it's if you can't beat them, join them. And I think the amount of CapEx required to build out global scale compute and hyperscaler services, the ability to train, acquire enough GPUs and energy and compute to train the kind of foundation models and cutting edge large language models that are required and increasingly necessary for next generation workloads. I think this isn't if you can't beat them, join them, but I think Oracle's way of joining them is really unique and interesting. And I think you're going to see more of this, because it's not just that they're market makers, it's that they're the stores through which you're consuming your workloads, your compute. And so these contracts that now $1 of AWS, $1 of Azure, $1 of GCP can be used on your Oracle commitments. I think that's a really intriguing go-to-market evolution. I think you're seeing a lot of companies, not just Oracle, take advantage of that.
Okay.
And I think that's the way of the future.
Now I got to ask, Oracle's stock is now up 8% in overtime, and we have not gotten guidance yet. We get that from Oracle on the call. How good a guide do you think is built into this move already? How much is it either at risk or perhaps could it go higher?
Well, look, after hours moves, particularly in what has become an extraordinarily volatile software tape, I think are less indicative of what you're going to see on the guide. Historically, guides from Q1 to Q2 are a little bit more challenging from Oracle. Even if they guide more aggressively than they're used to, they might come in just maybe slightly below where the consensus estimates are. So I think it's, investors are starting to look maybe a little bit longer term on Oracle, and that's what you're seeing in the move. I think the relationship with Amazon, the backlog, and the RPO that they just announced at $99 billion, indicative of what might be a longer duration growth curve, and prior commentary from Oracle CEO saying they're going to accelerate every quarter this year. They're going to grow faster coming out of this year. You've got an analyst day coming up on Thursday, where all indications are they're going to take their long-term target up for next year from $65 billion to something else. I think all of those are maybe a little bit more of the focus of the move than the guidance, but they got a high bar to clear on the guide for sure.
Okay.
Yeah, I think Oracle is proving that AI continues to be real. I mean, these numbers were pretty exceptional on the earnings that we got. Probably the street's baking in good guidance, which I would imagine they're going to get given their RPO is higher. Like that's another reason to think that Palantir is going to have good guidance going into 2025 because their RPO has gone up, I think, like 57% over the past couple of months. So that is not a bad thing at all. And again, Oracle proves that there are plenty of customers willing to pay for their AI workloads, especially when it comes to training large language models in the cloud. And that's why Oracle gets momentum. The other thing about Oracle that's interesting, that's why they had the Palantir partnership a couple months ago, is the sovereign cloud, aka governments storing a ton of their data with Oracle, and then imposing data analytics on top of it with their cloud infrastructure. So that partnership with Palantir, I think, can be really good for like NATO countries. We haven't heard updates on that, but I would imagine you could see a very big contract with Palantir and Oracle both splitting it 50-50, helping like, you know, Sweden or something protect their data and get everything from off-prem onto the cloud. So we'll see how that plays out. But Oracle right here up 8.89%. I just got a response under my tweet about Apple. Someone said, I've been beta testing iOS 18.1. So far, it's more annoying than useful. Interesting. I'm going to be really curious to see how people think of Apple, dude, because I don't know. So far, that event today was not exciting for the phone. The watch and the headphones were great, but the phone was not interesting. And if we're resting on the AI supercycle to take Apple to the moon, then I think we've got to find enough AI use cases. These are the hood metrics for those that are just joining. Again, really good. If you look at them summarized right here, they're up double digits across the board, some of them triple digits. These are not bad numbers at all. A little bit shy of how good it was in July, but I think that's okay because July was like a huge month for the broader equity markets. And as long as they have a month like this in September, they're still going to grow above 30%. Maybe they don't get to 40%. Probably they get closer to 30 to 35%. But that's enough for the stock to get to $25, in my opinion. I mean, the stock already should be $25. So when we get the rate cut, when we get Q3 earnings, and then when we get the October event that I think is going to blow away some people in terms of the product suite that they're going to announce, which probably won't go live this year, probably goes live in 2025, but the market will front run a lot of that stuff. Then Robinhood should be fine towards the end of the year. Matt bought Oracle in 2017, hanging on to it. Not bad. You probably have like what, a $30, $40 average, Matt? Something like that. Maybe a little less than that, maybe like $25, something around that range in 2017. Scott says, I just need Palantir to hold at these levels, not go up too much or too down. I have my entire position sold in covered calls from 32 to 36. One of the things I've been thinking about when it comes to covered calls is that unfortunately, if the stock starts running and you get kind of screwed out your covered calls, you could always buy back the calls and then and then write a new set of them to kind of cover the amount of money that you're losing in terms of giving back premium and then a net debit that you have to give back to close the contract fully. So it's not the worst case in the world if the stock runs and you have covered calls and you have to actually pay to get your shares back, not just give back the premium, but pay a premium on top of the premium, because then you just write another set of covered calls. But then the question is, you know, what's the next strike that you pick and will it be enough to maintain itself if the stock keeps running? I do think it's a little bit unreasonable to assume Palantir goes to $50 by the end of the year, because then you got a company trading at 50 times price of sales. Like that stuff is already 34 is kind of crazy, but 34 is still understandable. I think it's in the confines of understandable because 35 is my price target end of the year. 40, 45, 50 is like really pushing it. And I think they would have to just massively accelerate growth for something like that to happen. Now, S&P 500, I don't think a lot of us expected. So S&P 500 really set the bar in terms of just the price appreciation. But now it's going to be a question of over the next few months, do people like still care about that? And when they officially get added, is that going to have a negative effect or bad effect in terms of the sell side pressure? So we'll see. But again, the premiums today were kind of crazy, dude. Like the premiums were, it's so funny. I told you guys, I bought $35 calls on Friday and then I sold them immediately. I would have been up 408%. I bought them for 17 cents. They're at 60 cents. So I would have been up a decent amount, but I sold them back because I'm not a weekly call buyer. And I bought them by mistake, like swiped up by accident. I was like, oh, I didn't mean to buy this. But if we look at January 2025, the highest, 49 cents. Sorry, $49. Look at that. There's already 7,000 open, dude. $49 covered call. You see this January 2025. You've got people willing to pay $100 betting on Palantir being basically $50 in 5 months, that would imply 44% higher than what it is right now. Do you guys think that's crazy or not? I'm curious. What do you guys think? Is that crazy? Is $49 by January 2025 crazy? Or is that just not bullish enough? Is it going to be, should we be saying $55 or something? Dude, 7,000 contracts are open. What? They had to introduce these strikes today. There's no way these strikes were available before. Maybe I never looked at them, but it's kind of crazy, right? Like, I'm not like June 2025. Okay, I'll give you, maybe we have a chance to get there, but I mean, January 2025, that means we would have to average 10% a month for the next 4 months. A little bit more than that, about 11% from here, and not give up the gains we have already, up 110% year to date. That's a little much, dude. That's kind of crazy. Let me see if any insider sold today. Palantir, do we have any insider selling? We did, folks. We had some insider selling. 6,000 shares, nothing crazy. Okay, so one of the directors sold 6,000 shares. That's not too bad. And then let's check on Hood. Did we have any insider selling today? SEC filings. We had a little bit of selling today. 139,000 by Beju. So Beju's the co-founder of Robinhood. He's retiring. I think he's still on the board, but he's leaving. So I'm pretty sure this is scheduled because he does this once a month, every single month. But he sold 139,000. If he didn't sell 139,000, say, Robinhood might have rallied a little bit higher to $20. But all right, so we got one insider sell on Robinhood of 140,000 shares basically, and on Palantir about 6,000 shares. Were they selling to raise capital to YOLO $50 call options? Maybe, dude. Maybe. $49 by January is kind of cracked. But here's the thing. When a stock if I told you when Nvidia was 40 that it would go to 130, you probably would have told me you're full of shit. So is it the same here? Well, the only difference is Nvidia is growing like 300% year over year, and it did that for the past couple quarters. So that growth, you could argue, justified that valuation, even though the valuation people still argue is too much. Palantir at $49 would be a $105 billion market cap. And if the growth doesn't change, they're going to be doing $2.8 billion of revenue, which would be literally more than 50 times price to sales. It's a lot. It's expensive, but people, apparently 7,000 contracts were willing to buy that shit. I wouldn't bet against it, aka short it. But I don't know if I would buy those calls. I would sell those calls, even though even selling those calls still feels a little scary. Now, again, selling those calls feels scary on a green day when things go back to normal in terms of just like the market chills out. You kind of realize why people sell calls. But Palantir hasn't chilled out all year. Even though it's had little breaks in between, it hasn't actually chilled out. So if it actually legit chills out, then yeah, the call sellers are going to win. If it stops chilling out, I think the call sellers are going to be scared. Now, granted, if you have shares at a $25 average and you sold a call for 49 and you have to sell at 49, I don't think you're the angriest, but I also think if we pump all the way to 49, you're going to be like, holy crap, why don't I hold on to my shares, right? And so that is kind of the dual-edged sword with selling calls at the end of the day on Palantir. Someone sold a call for $49, got a juicy premium on 1220. What was that paying? So December 2020, I bet you it was paying like 60 cents. That's my bet. December 2020, you sold $49 call, 70 cents. Yep, there you go. Wow, the fact that you got basically the same as a Jan 2025 for $49 is pretty incredible, dude. 905 of those were open. Wow. Let's see. This the rest of the next 4 months might be kind of crazy. If we get a really good CPI report, folks, maybe things get even crazier. CPI, I'll be live on Wednesday at 8:20 a.m. Eastern. We'll see what happens there. And let's keep the show going. It's exciting, exciting stuff in the context of Palantir. All right, that is it for me. I'll have an update on Palantir with Daily Palantir talking about the BP deal more in depth later today. If you missed the Matt Babin interview, if you scroll back to the 37-minute, 54-second part of the stream, you'll get the Matt Babin interview. If not, you can just wait until Daily Palantir comes out because I'll probably be reacting to that interview in that video. And then tomorrow, we've got market open. I will not be able to do the market close tomorrow because I'll be traveling tomorrow, but we'll be back with the market open on Wednesday, and we will do the market open tomorrow as well. just not the market close. Also, the debates tomorrow. Trump and Kamala. I'm not going to be covering that because, again, I'll be traveling, but I'll tune in here and there and try to give some thoughts on Twitter. But that's going to also be very interesting to see what happens. All right. Exciting day. This was fun. Don't get to have that many 14% days, but we got it for Palantir. Congrats to longs. Hopefully you guys enjoyed. And let's just keep this growing and keep the execution continuing to do what we have to do to see Palantir get to the levels that I think we all believe that it can get to. All right. Thank you, everybody. I'll see you guys tomorrow at 8:45 a.m. in the morning. Bye, everyone. Have a good one. Good night.